What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So we've gotten a lot of good positive news lately. Inflation is moving in the right direction. The Fed has formally paused interest rate hikes for now, and Bitcoin crossed over 30,000 once again on the back of BlackRock, the world's largest asset manager, filing for a Bitcoin spot ETF. Which, for the record, you should not take this Bitcoin news lightly. BlackRock would not get into this game if they did not think that one, demand was there, and two, they could actually obtain approval. And for the record, Bitcoin has already doubled since the November low. You really should be paying attention here. On the flip side, ChargePoint has reached a new all-time low this past week at $7.22. Why is the stock crashing? That's what I want to talk about in today's video. I'll go over the primary drivers behind the stock price drop. We'll check on where overall analyst sentiment currently is, and I'll close with what I'm personally doing as far as buying, selling, or holding. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through, as always, so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So, what is going on with ChargePoint? The stock closed the week down 18.67% at $7.36, but that was after it hit a new all-time low of $7.22. The biggest driver for the downtrend in ChargePoint is mainly surrounding all the positive news around Tesla gaining more and more adopters for its NACS charging standard. Over the past month, Tesla has set up partnership with Ford and GM. Both will use the adapter to connect to the Tesla supercharger network between now through the end of 2024. And starting in 2025, all of their new models will come equipped standard with the NACS plug. Most EV charging infrastructure players like Blink, EVgo, ChargePoint, and others have also jumped on board and will be offering hardware moving forward with the NACS plug as well as the current CCS type. And just this week, Rivian joined the fray by announcing that they too, similar to GM and Ford, would be partnering with Tesla. All of this positive news has boosted the Tesla stock, but conversely, this has people feeling as if this is bearish for ChargePoint. So let's put this into perspective. Tesla is opening access to 12,000 supercharging locations for all of their new partners to begin with. However, we will need well over 500,000 charging locations to support the growing EV fleet that will be in circulation as early as 2025. And let's not forget that retail shopping locations, your workplace, and residential area, just to name a few, where you would typically park for an extended period of time, do not and will not require supercharging. What does that mean? Well, ChargePoint has the biggest network of level 2 charging with 65% of market share and over 50% and growing of SP 500 companies as customers. The bottom line is this: we have a long way to go in EV adoption path. This means that the infrastructure charging needs are only growing, and Tesla, realistically, cannot fulfill all that demand. And unlike Tesla, ChargePoint's core business is the charging infrastructure. So as I said in my last video, ChargePoint is extremely well positioned to capture this upswing. This is the fundamental reason why ChargePoint is growing revenue at a minimum of 40% year over year. So ultimately, do not get sucked into the short-term noise. And so since the last time I covered ChargePoint, the overall consensus rating has been adjusted to a moderate buy. We now have 10 buy ratings, 4 hold ratings, and still 0 sell rating. So again, the noise is just that, noise. The high end of the range is $27 and the low end remains unchanged at $10. The average consensus price target decreased slightly to $15.40. This implies that you could potentially over double your investment from current levels with a 109.24% gain. Don't forget that ChargePoint is projecting to be cash flow positive in Q4 of 2024. That's next year. The stigma of a non-profit generating company drops at that point, and we all know what happened with Tesla once they went cash flow positive. So this brings me to how I'm thinking personally about the stock. My views on ChargePoint have not changed because the fundamentals have not changed in the last few weeks. The fact that some investors are being swayed by the short-term news flow only provides opportunity for those like me who are thinking longer term. The valuation on the stock is more appealing here and is making it easier to accumulate more shares. And for that reason, I've added 200 more to my position with my buy points at $8.80 and $8.10. I intend to continue to DCA and take advantage of these lower prices while they last. So I've said this before, but it's worth saying again, EV interest and adoption is on the rise. That's undeniable. This trend is accelerating and the infrastructure has no choice but to accelerate right alongside it. ChargePoint is by far the largest provider of level 2 charging solutions with a growing network of level 3 superchargers. This makes them extremely well positioned to benefit from it all. And so even though the stock is now down 22.77% year to date, as a reminder, the all-time high from the last bull run was $49.48. That was at a time where the business fundamentals were not nearly as positive as they are now. And for full context, ChargePoint is on pace to hit its first profitable quarter when interest rates are expected to be lower and QE, or quantitative easing, could be back in effect next year. Will we hit $40 plus once again? I don't know. But it's not unreasonable to think that we could indeed hit the top end of the current price target. And so at $27, that is essentially 4x your investment. I personally like those odds, and that's why I am still a buyer. You will have to make your own decision. But on that note, that is it for me today, keeping it short and sweet. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.